the kind of growth, the robust growth that we saw in the loan book in the first and second quarters of the financial year continued into the third quarter. And as we look at the loans outstanding on 31st of December, the total loans outstanding stood at 1,60,941 crores, which represents an increase of 22% over the loan book number as of 31st March 2011. Whilst the individual component went up by 22%, the growth has largely been while the total went up by 22%, the growth has largely been in individual loans. And the individual component went up by as much as 26%. Even this is after selling loans. As you know, we don't retain all the loans that we originate. We also sell down loans. So if we take the last 12 months, we've sold loans aggregating to 5,264 crores of rupees, which are all individual loans. Now on these individual loans that we sell, we continue to receive income on the loans sold because there is a difference in the interest rate that we receive from the customer and the interest rate that is at which the loans are sold. So if we add back the 5,264 crores of loans which were sold, then the growth in the loan book, the overall loan book would have been 25% and the individual loan book growth would have been as high as 31%. So we had a 31% growth in the second quarter. We continue to have a 31% growth even in the third quarter. As of 31st of December, we had a total of 16,049 crores of loans which have been sold by us. But on that 16,049 crores, we continue to receive a weighted average income of 1.37% a year. If you look at the current year, if you look at the growth in the loan book from 1st April till 31st of December, then 85% of the growth in the loan book has been on individual loans and only 15% has been on non-individual loans. Whereas when you look at it on a balance sheet basis, about 68% of the lending is to individuals and 32% is to non-individuals. But in this period of 9 months, the growth has significantly been on individual loans. Spreads, which represents the difference between lending rate and borrowing rate, stands at 2.28%, which is an increase of 1 basis point over the spreads that were there on 30th of September. If we break down that 2.28% into individuals and non-individuals, the individual spread stands at 1.95%, the non-individual spread stands at 2.79%, giving a weighted average of 2.28%. Net interest income for the first quarter of for the third quarter of the year stood at 1,625 crores, which compares to 1,366 crores in the third quarter of last year, giving an increase of 19%. If you look at the 9-month period, net interest income stood at 4,785 crores compared to 4,038 crores in the previous year, giving an increase of 18%. Profit on sale of investments has been slightly lower in this quarter compared to the past trend. If you look at the profit on sale of investment number for this quarter, it stands at 96 crores, which compares with 88 crores in the third quarter of last year. So the growth in profit on sale of investments during the quarter is only 9%, as against the increase in the net interest income on the quarter, which is 19%. Net operating income, which would then take into account the profit on the investment sold, stood at 1,721 crores compared to 1,454 crores in the third quarter of last year, giving an increase of 18%. On a 9-month basis, net operating income stood at 4,995 crores of rupees compared to 4,229 crores in the first 9 months of last year, giving a similar increase of 18%. Net interest margin for this period stood at 4.1%. In terms of asset quality, we continue to see improvement or even further improvement in asset quality, and we have now on 31st December seen the 32nd consecutive quarter where the percentage of non-performing loans was lower than what it was in the previous year at that time. Our non-performing loan number as of 31st of December stood at 0.75% compared to 0.82% in December of last year. These are, of course, gross non-performing loans. These have been fully provided for, and net non-performing loan number is nil. Historically, we've always had this practice of providing for loans at a rate which is faster or which is higher than the rate which is prescribed under regulations. And accordingly, including the provision for standard assets which has been created in the current year, we have charged the P&L account with a total provision of 40 crores in this quarter compared to 20 crores in the third quarter of last year. So provisioning has doubled, even though non-performing loans has got lower. On a 9-month basis, provision stands at 120 crores. This is provision charged to the P&L account. It stands at 120 crores compared to 55 crores in the previous year. So it's more than doubled. From a regulatory perspective, we needed a total provision of 1,492 crores in the aggregate. And against that 1,492 crores, we are actually carrying a provision of 1,783 crores. So we today carry a provision which is 291 crores higher than what is required under regulation. And given the fact that historically we've always had this practice of providing a higher amount, that practice was there at a time when standard asset provisioning was not required. Now that standard asset provisioning is required, we will look at our provision requirement in the fourth quarter of the financial year and really need to see whether we need to keep such high provisioning levels. If you look at the post-tax profit for the quarter stood at 1,140 crores of rupees compared to 981 crores in the previous year's third quarter, giving an increase of 16%. If you look at 9 months profits, that's from April to December, 9-month profits stood at 3,293 crores of rupees compared to 2,796 crores last year, giving an increase of 18%. We continue to hold all our, these are of course standalone results. I'll talk of consolidated results separately. If you look at the gains on our investments, the unrealized gains on our listed investments, which is the difference between the market price of the investments and the carrying cost, the unrealized gain stands at 34,117 crores as of 31st December. So if you were to look at our book value on a standalone basis, the book value number would be 166 rupees. But if we were to add the unrealized gain on listed investments to the shareholders' funds and then recompute the book value number, that number would increase to 387 rupees a share. In terms of capital adequacy, we carry a level which is much higher than what the regulations require. As of 31st of December, we carried a Tier 1 capital of 14.9% against a regulatory requirement of 6%. In addition to the 14.9% of Tier 1 capital, we also carry a Tier 2 capital of 2.6%, giving a total capital adequacy of 17.5%. And this 17.5% is against a regulatory requirement of 12%. When you look at consolidated results, which is when you include the share of profits of our subsidiaries and associate companies, the quarterly growth in profits is significantly higher at 28%. The third quarter of the year saw a profit of 1,706 crores, which compares to 1,337 crores in the third quarter of last year, giving an increase of 28%. If you look at the 9-month period, 9-month profit on a consolidated basis stands at 4,557 crores compared to 3,686 crores in the previous year, giving an increase of 24%.